All right, let's dive into A10 Networks. We're looking at their first quarter of 2025 performance based on their latest earnings call.
Exactly. And this deep dive, well, it's all about boiling down that pretty dense transcript. We want to pull out the key numbers, what management's thinking, and, the market stuff they talked about.
Right. So you don't have to wade through it all yourself. Our mission is basically to hand you the highlights, the need-to-know stuff.
Yep. We'll touch on growth areas, this acquisition they made, their financials, obviously, and how they're dealing with things like, trade policy and interest rates.
Sounds good. It's a really interesting snapshot of a company in that critical networking and security space, seeing how they're adapting. So, okay, let's kick off with the big numbers. Q1 2025 for A10 Networks. What did they report?
So revenue landed at $66.1 million for the quarter.
Okay, $66.1 million. And how does that stack up against last year?
That's actually a 9% increase year over year, so decent growth there.
9% overall. And how did that break down to their different customer segments?
Yeah, good question. Enterprise was really strong. That segment grew 18% compared to last year.
Wow, 18% in enterprise.
Yep. And then service provider revenue, that was also up, but more like 3%.
Okay, 18% is a big jump for enterprise. Mm-hmm. Is there more to that story? Any context we need?
Yeah, absolutely. Context is important here. While 18% looks great, and it is, management did mention that Q1 of 2024 was a bit softer for enterprise.
Yeah, okay. So an easier comparison, maybe?
Exactly. It helps that year-over-year number look particularly good. They actually pointed to the trailing 12-month growth for enterprise, which smooths things out.
Right. And what was that number?
That was still a very solid 12%. So it suggests, more durable underlying growth, not just a one-quarter bounce against a weak prior year.
Got it. So 12% sustained growth over the last year in enterprise. That feels like a clearer picture. Beyond the numbers, what was the general vibe from management? How did they feel about the quarter?
Overall, the feeling was pretty positive. They talked about, continued execution, broad-based growth. It wasn't just one big deal carrying the quarter.
Okay.
And they really hammered home the point that their solutions, security, network capacity, these are addressing non-discretionary needs for a customer.
Right. Stuff people have to buy, basically.
Pretty much, especially now. And that gives their business a certain durability, even if the broader market feels a bit shaky.
That makes sense. Non-discretionary is a good place to be right now. Okay, so let's dig into why people are buying, what's driving the demand. You mentioned AI, especially for service providers.
Oh, yeah. AI is a huge factor. That 3% growth in service provider, well, it seems kind of modest next to the enterprise number.
Yeah.
A big chunk of that is being fueled by just the massive build-out happening in data centers. Service providers need way more capacity to handle all the AI stuff, training models, running inference, you name it.
And A10 is positioned well for that. What's their angle, their competitive advantage there?
Well, it seems their tech really hits the mark for these AI buildouts. Their solutions are known for efficiency, like really high throughput, getting lots of data through fast, and low latency, which is key for AI apps.
Okay, speed matters.
Definitely. And they integrate security right into those high-performance boxes. So the upshot is service providers can build out these massive capacity increases using fewer A10 products compared to, say, piecing together solutions from multiple vendors.
So simpler, maybe cheaper overall.
Exactly. Fewer devices, simpler management. And that efficiency and integration is a real edge. It means they often get designed into these big data center projects early on.
Makes sense. If you're building at that scale for something demanding like AI, that integrated approach sounds critical, not just nice to have.
Totally.
So, okay, that covers the service provider side. What about enterprise? You mentioned 12% trailing growth, broad-based demand. Is AI a factor there too?
Absolutely. AI is driving enterprise demand as well, though maybe in slightly different patterns we can touch on. But yeah, beyond AI, the growth comes from, consistent investment A10 has made in that segment over time, building out sales, refining products. And like I said, it wasn't just one massive order this quarter. It was contributions across the board.
Reinforcing that idea of it being a more durable engine for them.
Precisely. And actually, speaking of enterprise and security focus, that leads right into this acquisition they just did.
Yeah, ThreadX Protect. Tell us about that. What did they buy and why?
So they acquired assets and some key people from ThreadX Protect. It looks like a very targeted move to beef up their cybersecurity portfolio.
Okay. And what specific capabilities does ThreadX bring to the table?
ThreadX focuses on protecting web applications and APIs.
Ah, WAF and API security.
Exactly. And management stressed that attacks targeting those areas are just, well, exploding. Think about modern apps, they're all connected via APIs, right?
Yeah, everywhere.
And those connection points, those APIs, are becoming major targets. This is super relevant for enterprises putting more apps and data online.
And ThreadX has a particular way of doing this.
Yeah, they mentioned it uses behavioral analysis and risk profiling. So instead of just static rules, it looks at how users and apps are actually behaving to spot weird or malicious stuff, more adaptive,
Yeah.
which is pretty important against threats that are always changing, including maybe threats aimed at AI-related apps or APIs.
Interesting. So how does this plug into A10's existing lineup and their bigger picture strategy?
It fits in a few ways. First, ThreadX is delivered as SaaS, software as a service.
Right. Adds to their recurring revenue stream.
Yep. Complements their traditional hardware boxes. Second, it apparently pairs well with their existing AI firewall product. And third, it just makes them, well, more relevant and essential in the enterprise security conversation.
So it fills a gap, makes the offering stronger.
Definitely. They talked about their A10 Defend portfolio now being more comprehensive. It integrates things like DDoS protection, threat intelligence, bot protection, and now this web app and API piece, all designed to work across different environments: public cloud, private cloud, on-prem, colo.
A hybrid approach. Sounds like they're covering the bases. Okay, let's switch over to the financial health side. Profitability. How did that look in Q1?
Looked pretty strong, actually, especially on a non-GAAP basis. Gross margin was 80.9%.
Okay, that's healthy.
Yeah, right in their target range of 80 to 82%, even with some initial costs from bringing ThreadX on board. And adjusted EBIT, basically their operating profit, came in at $19.5 million.
And as a percentage of revenue?
That was 29.5% of revenue, so strong operating margin.
Nice. And the bottom line, net income.
Non-GAAP net income was $15 million. That works out to $0.20 per diluted share.
And how does that compare?
That's up nicely from the same quarter last year, which was $12.7 million or 0.7 cents per share.
Okay, so improved operating performance showing through there. What about GAAP?
The GAAP net income was $9.5 million or 0.13 cents per share. That was pretty flat compared to last year's $9.7 million, also 0.13 cents per share.
Got it. And cash flow, were they generating cash?
Yep, generated $15.2 million in cash from operations. Management said this felt like things were kind of normalizing, getting back to their usual cash generation patterns.
Okay. And looking at the balance sheet, I noticed their cash position took a huge jump.
You certainly did. End of March, they had cash equivalents, and marketable securities totaling $355.8 million.
Whoa. That's up massively from, what, under $200 million at the end of last year?
Yeah, $195.6 million at the end of 2024, so a big increase.
Where did all that cash come from? Almost $160 million extra.
Mostly from issuing convertible senior notes. It's a type of debt. They issued $200 million initially, then tacked on another $25 million shortly after.
Okay, so $225 million in total from those notes.
Right. They pay 2.75% interest, mature in 2030, and, like the name suggests, they can potentially convert into company stock down the road. Pretty standard stuff for converts.
So issuing debt means their debt level also went up.
Correct. Long-term debt finished the quarter at $217.7 million, which is basically those new notes.
Okay, so they've loaded up on cash. What are they doing with it? How about returning value to shareholders?
They're definitely doing that. Paid out $4.4 million in dividends during the quarter.
Standard dividend payment.
Yep. And they were also pretty active buying back their own stock. Repurchased $47 million worth of shares.
$47 million. That's quite a bit for one quarter.
It is. And they mentioned using some of the proceeds from those convertible notes to help fund those buybacks. The average price paid was $19.55 per share.
And are they continuing this? What about future dividends or buybacks?
Looks like it. They've already approved the next quarterly dividend. Same rate, 0.06 cents per share, payable in June. And importantly, they authorized a new share repurchase program for $75 million.
So they're reloading after spending that $47 million. Signals intent to keep buying.
Seems that way, yeah. They'd nearly used up the previous authorization.
And did they say anything about their full-year targets for profitability? Still sticking to those?
They did. Reaffirmed the full-year goals. Still aiming for gross margins between 80 and 82% and adjusted EBIT margins of 26 to 28%.
Maintaining those targets while investing in things like ThreadX suggests they're keeping a tight grip on costs elsewhere. But you also mentioned headwinds,
Yeah.
external pressures.
Right. They definitely acknowledge the broader environment, market volatility, the effect of higher interest rates potentially slowing down some customer spending decisions.
Yeah, the macro stuff.
Exactly. And increasingly, these trade policy dynamics, tariffs, specifically from the U.S. side, are becoming a factor. Even though A10's solutions are pretty essential, these external things can still create friction, maybe mess with the timing of orders.
They talked about tariffs in the Q&A, right?
Right.
How are customers actually reacting?
Yeah, it sounds like a mixed bag right now. They said some customers seem to be hitting pause, waiting to see what actually happens with potential tariffs. They even mentioned July 7th as a date some are watching.
Okay.
But then others are apparently thinking about pulling orders forward, trying to lock things in before any potential tariffs hit.
So pushing and pulling, what's the net effect?
For now, A10 sees it as roughly neutral, but the uncertainty itself is clearly a headache. And there's also the question of how their own suppliers, the subcomponent makers, might react down the line.
Right, the ripple effect. Speaking of supply chain, are they doing anything about their own exposure? You mentioned manufacturing partners.
Yes, they rely on partners, and right now there's significant exposure concentrated in Taiwan.
Okay.
So they said they are actively working on making their global manufacturing and supply chain footprint more resilient, more flexible geographically, basically accelerating plans they might have already had for like disaster recovery, but now driven more by these global trade tensions.
Diversifying. Makes sense.
Yeah.
What about currency? Any impact from, say, the yen fluctuating?
They do business in Japan in yen, yeah, but most revenue is US dollars. They said the Japan business tends to be project-based, so demand isn't super sensitive to small currency moves. FX can impact the reported revenue growth number they mentioned, seeing about a 2% drag a couple of years ago from it. But they do hedge their receivables and contracts to protect the actual profit below the top line from those swings.
Got it. And competition. Anything changing there, especially with all the focus on AI data centers?
They basically said the competitive landscape for typical data center builds hasn't shifted dramatically. Their strategy is really leaning on those strong existing relationships they have, especially with the big service providers where they're already involved in these AI projects.
Playing to their strengths. Okay, looking forward then. They sound pretty bullish on AI long term. How clear is their view on these future projects? Do they have good visibility?
They described it kind of in waves. This first wave, the big public clouds, private clouds, large enterprises building out initial AI infrastructure, they feel they have reasonably good visibility into that. Although they did acknowledge that even those big customer plans can shift based on, their own financial situations. But the opportunity they seem really excited about, the potentially bigger, more sustained one, is maybe 1 to 2 years out.
And what's driving that?
That's when they expect a much broader set of enterprise customers to start deploying more AI inference models, actually using the trained AI models, particularly on-premise or in their own private clouds.
Interesting. Why the focus on on-prem or private cloud for that next wave?
Right.
Especially outside the U.S., I think they mentioned.
Right. It's not that it won't happen in the U.S., obviously a huge market, but outside the U.S., you have a lot more focus on data sovereignty and data privacy rules.
Regulations forcing data to stay local or private.
Exactly. Many countries have rules that basically require organizations to keep sensitive data and the processing of it within their own borders or under tighter control in private infrastructure. They can't just throw everything into a giant multinational public cloud.
So that regulation actually creates demand for private deployments.
It certainly seems to, and that plays well for companies like A10 that have strong solutions for private data centers. It could shape the market quite differently outside the U.S. compared to regions maybe with fewer restrictions.
That's a really interesting dynamic. Compliance driving infrastructure choices. Did they talk about product refresh cycles at all? Is that playing a role?
Yeah, they touched on it. Management clarified it's more of a normal, ongoing cycle. For their service provider customers especially, hardware gets used for, say, 5 to 7 years, hits end of support, or just isn't performant enough anymore and needs upgrading.
Standard tech life cycle.
Pretty much. It's not like some sudden, massive rip and replace happening all at once. It's a continuous thing that naturally shifts revenue from service contracts on older gear towards new product sales over time as customers buy the latest generation.
Okay, so pulling it all together, they're investing, growing, but also managing costs and dealing with these external factors.
Yeah.
How did they kind of summarize their approach?
They talked about being able to shift resources around. Like R&D spending is up, partly to integrate ThreadX and keep innovating. But at the same time, they managed other costs. Sales and marketing was actually down a bit this quarter.
Balancing act.
Yeah, this flexibility lets them invest where needed while still hitting those overall profitability targets they've set.
And on the tariffs specifically, if those do bite and increase costs, what's the plan for pricing?
Their view is if costs go up due to tariffs, they expect to work with their customers to share that burden somehow.
Not just pass it all on.
Doesn't sound like it, at least not automatically.
Okay.
They believe their customers value the performance and innovation A10 provides, not just the absolute lowest price. So the idea is to partner up and figure it out once the actual cost impact is clear.
Okay, so bringing this back to you, the listener, why track all this detail about A10 Networks? What's the takeaway?
Well, looking at a company like A10 gives you a really practical case study. You see firsthand how a key technology provider, networking, security, is navigating huge trends like AI.
Right.
You see how they're dealing with the real-world effects of, economic uncertainty, interest rates, trade friction like tariffs, and you see the balancing act between investing for the future, managing the bottom line today, and returning cash to shareholders.
It's like a microcosm of the bigger tech and economic picture.
Exactly. It shows you how those big macro forces actually translate into specific decisions and results for a company on the ground. It helps make sense of the broader market dynamics.
Yeah, it's a useful lens.
Definitely.
Okay, so that wraps up our deep dive on A10 Networks Q1 2025 call. Key takeaways.
Wow.
Solid execution, growth driven by enterprise and AI demand and service providers, the ThreadX acquisition boosting their security game, strong cash position thanks to those notes, and actively navigating those external headwinds while keeping an eye on future AI opportunities.
And thinking about those future opportunities, here's something to chew on. How much might those data sovereignty and privacy regulations, especially outside the US, really push enterprises towards building their own private AI clouds? Could that regulatory push significantly reshape the tech landscape, maybe favoring companies like A10 who are strong in that private data center space in ways that are quite different from the dynamics we see with the big dominant public cloud players?
That's a fascinating question. Definitely something to watch. All right, before we officially sign off, it's time for a word from our This Is Not Financial Advice desk. Now, purely based on the vibes and hints from this earnings call transcript, here's an outrageous, but maybe just plausible idea, strictly for entertainment, remember?
Oh, here we go.
Look at that cash pile A10 built up over $350 million, right? Funded partly by pretty cheap debt. And they just authorized another $75 million for share buybacks after already spending $47 million. So maybe the real story here isn't just the organic growth or AI. Maybe it's a massive leveraged buyback play in disguise.
You think they'll just pour that cash into buying back stock?
Could be. Maybe management sees their own stock as the best possible investment right now, better than M&A in this uncertain market. They could try to use that huge war chest to aggressively repurchase shares, juice the EPS numbers, and basically financial engineer a higher stock price over the next year or two.
A highly leveraged bet on themselves, essentially.
Exactly. Of course, that assumes they can actually buy that many shares without driving the price way up, that the market cooperates and that nothing goes wrong with the core business. So, yeah, pure speculation.
Reading the tea leaves, or maybe just the dollar signs on the balance sheet.
Indeed. And remember, folks, that was just for fun, absolutely positively not financial advice. Do your own research.